Hey guys, welcome back on the channel. In this video, we are going to go over how you can earn with Jupiter's tokens. They have three overall: Jupiter Staked Sol, JLP, and also JUP. All of these tokens will give you exposure to Jupiter's DeFi ecosystem and also in a broader way to Solana's DeFi ecosystem. Solana has $8.2 billion locked in TVL. Jupiter is a third ranking protocol with over 2.2 billions, making them definitely a DeFi giant on Solana. They handle billions in trades, since Jupiter is powering swaps, perpetual trades, and also Solana staking through jupSOL. As Solana's ecosystem grows, Jupiter also allows you to expose yourself to that rising tide, and for that reason we'll explore all the options that Jupiter has for users to invest with, different risk levels, different yields. So we're going to dive into their differences, risk levels, keeping it simple, beginner friendly. So as always, check the timestamps down below to navigate through the video, and let's dive in. So let's start by briefly addressing what is Jupiter and its tokens. Jupiter is a DEX aggregator which launched in 2021. It is actually Solana's top DEX aggregator. If you need to swap on Solana, Jupiter gives you the best rates because they are in a layer above all of the exchanges, allowing them to tap into all the liquidity pools of all exchanges, all the markets on Solana. So you just need to put on the pair that you're wanting to trade, what token you want to sell, what token you want to buy, and Jupiter will show you the best route, or in other words, the best price for your trades. Just look at the volume that they handle on a daily basis. Yesterday, their perps volume was over 1.2 billion. The aggregator volume was over $940 million. And you can have an idea of the annualized revenue for holders, which right now is at $7.7 million. Also worth noting, Jupiter is decentralized, meaning that you don't need any KYC, you just need a Web3 wallet, Phantom, Solflare, anything that supports Solana. Once you have your wallet, you log in, and you start trading with the funds that you have in it. As simple as that. The best part is that everything is transparent and recorded on chain. That's essentially the main difference between what Jupiter on Solana offers versus a centralized exchange like Binance, Gate, Bybit, etc. So let's talk about all the tokens that Jupiter's ecosystem has. Let's start with Jupiter, or JUP in short. They're actually at an all-time low or very close to that. So right now, under 50 cents, I can consider it to be definitely a bargain. From all of the tokens that Jupiter has, I would consider this to be medium risk. The benefits for holders will be airdrop eligibility, and also you will have the power to vote for the future of the platform, so essentially governance power. To take part in that, you need to hold JUP tokens, then you come here to jup.ag, more tab, then you select governance. You just have to connect your wallet, and from here on it allows you to lock JUP tokens to receive your voting power, and there will be these active staking rewards which will allow you to earn as long as your JUP tokens are locked. You can even input your email by clicking notifying me. This will allow you to receive email alerts, newsletters from Jupiter DAO. Essentially, you will be filled in with the latest news about Jupiter DAO, allowing you to never miss a vote again. Next on the list, JLP, standing for Jupiter Perpetual's liquidity provider. From all the three tokens we're covering, I would consider this to be high risk. The JLP token value is dependent from an index fund of Solana, Ethereum, Bitcoin, USDC, and USDT. The way this works is that when you come here on perpetuals on Jupiter, you see that there's the earn button. When you click it, it explains you everything about the JLP pool. As you can see below, there's these 5 assets we just mentioned, which make up for the pool. Essentially, if you are holding JLP tokens, you are having exposure to this pool. Since this is a liquidity pool that allows users to trade perpetuals, you will have exposure to the composition of the pool. Right now, you can see the weightage here: 47% Solana, 8% Ethereum, 13% wrapped Bitcoin, 32% USDC, and virtually 0 USDT. Essentially, holding JLP means that you are a liquidity provider to this pool. You have exposure to all of these assets. Although they are blue chips and stables, it is still a liquidity pool, and hence there's the risk of impermanent loss. The more tokens you have, the bigger your share of the pool, of course. You will also be exposed to traders' profit and loss, and whenever people trade on Jupiter's perps, they will generate fees, 75% of those, which are coming from opening and closing fees, price impact, borrowing fees, also trading fees on the pool, will be going to JLP holders. Or in other words, everyone who is invested here in the pool, and by default they're holding the JLP token. Very important to know that the APY, it's always going to be denominated in US dollars, and it's calculated based on the 75% of fees generated from perpetuals trading activities. These will not account for assets appreciation and traders' P&L. These fees will be constantly generated as long as people are using the perpetuals DEX, and all of the fees are being redeposited back into the pool every single hour. At any point in time, you can come here to see the current API. Right now it's at 16.7%. If you click it, it will change up to APR. Remember, your earnings will be deposited hourly to the pool. Since the rewards for holders are constantly being compounded back into the pool, this means that if you want to take profits, you should sell a portion of the pool that you own. So the best deal for you as a seller would be selling at the top, obviously. That can make things simpler, so you wait for the token price to go up, but also that's why it is a high risk type of investment here, since you can be exposed to long periods of time where the pool is not performing all that well, for example during a bear market, and in that case it's probably not a good idea to sell at that point. But sometimes you do need to take profits. As always, the best time to be taking profits is during a bull market. So potentially look at this as a long-term type of investment where you should just hold during down market times, and when the price goes up, then yeah, take profits. If you want to grab a bag of JLP, you can easily swap it in any market on Solana. If you are already on the pool section, you can easily buy or sell from here. You swap it, and now you're already holding percentage of the pool, which depends on how much tokens do you have. Lastly, there's jupSOL, which represents staked Solana. There's plenty of liquid staking tokens on Solana. Jupiter is also one of Solana's biggest validators, meaning that if you want to stake Solana, earn passive yield on it by helping to secure the blockchain, you can definitely stake your Solana by allocating it to Jupiter's validator. jupSOL's value will grow in time because the revenue is coming from these points. 100% from all native staking rewards, so they take no commission, 100% of rewards from Jito tips, and 80 to 100% of all block rewards from validators. And also when you hold jupSOL, you're also helping Jupiter to improve its transaction lending rate, making it easier for all Jupiter users to swap DCA or place limit orders more reliably during high network activity. I would say the risk factor from all of the three is the lowest with jupSOL, but of course, since it is a liquid staking token, its price depends on Solana's price. And the cool thing about liquid staking is that it allows you not only to earn rewards by staking Solana, but also keeps your assets liquid, and then you can use jupSOL for any DeFi activity. And you see that its value is actually superior to Solana because it does factor in the yield that the staking rewards are bringing. You could also use it to earn extra yield actually on liquidity pools in some of the top DEXs of Solana. You can get jupSOL from any market on Solana, straight up from Jupiter.ag, some of Solana's DEXs also, or actually any of Solana's DEXs. You can find jupSOL even on centralized exchanges, so you don't have to go through staking mechanisms or anything. You just need to swap tokens, buy it, hold it. Its value will increase over time because of the aggregated value coming from the staking rewards. Once you wish to sell, it's just as simple as that, coming to any market and also selecting the other token you want to sell it for. You can also yield farm with any of these tokens. On Radium you see there's plenty of liquidity pools that pair up with JLP. Some of them have quite deep liquidity. Let's sort these out. So this one has almost 500,000, Solana paired with JLP, really high volume to TVL ratio, and it is also being incentivized with 10% rate tokens. There's also some interesting pools here for JUP. This one is the highest liquidity one, JUP paired with Solana. There's no incentives actually with these ones, but it's still a way where you can get extra yield. You can also find liquidity pools for jupSOL. They will be mostly jupSOL paired with some other liquid stake token. This one is Marinate Sol, I believe. Although don't expect the volume to be crazy on this one. So it's something more stable, lower risk, also lower yield. And that's about it, guys. That's how you can get exposure to Jupiter's DeFi ecosystem. High risk, medium risk, low risk, but all of them give you exposure to one of the biggest players on Solana right now. So if you enjoy this type of content, like and subscribe for more. If you have any questions, drop a comment down below. I'll get back to you. I'm going to wrap this one up. Thank you for watching. Take care, keep on exploring crypto. I'll see you on the next one.